I'm Denise Hazelrig with Strategic Exchange Solutions. Today I'm here to talk about a 1031 exchange option called a reverse exchange. Reverse 1031 exchanges are an option for clients that need to purchase the replacement property before they can sell the relinquished property. Instead of waiting to utilize sale proceeds, the client advances funds for and closes on the purchase first. Realtors should be aware of the mechanics involved because choosing a reverse exchange has a ripple effect on everyone involved in the transaction: the title company, cooperating realtors, lenders, and professional consultants. Strategic Exchange Solutions is a qualified intermediary that can provide documentation and guidance for reverse 1031 exchanges. The best time to contact us is before the purchase agreement for the new property is to be signed. This is because the notable difference between a standard exchange and a reverse exchange is that the 1031 client is not the buyer. Instead, Strategic Exchange Solutions provides an exchange accommodator title holder, which is a company that replaces the 1031 client as the buyer and holds the purchase property until the client sells their asset. It involves more than inserting a different name in the buyer identification area in the contract. The rights and obligations in the purchase agreement still pertain to the 1031 client. The inspections and other due diligence materials still belong to and benefit the 1031 client. The credit reports and loan terms are still based on the 1031 client financials. In contrast, the accommodator cannot withdraw, cancel, or modify the purchase agreement. It cannot make an earnest money deposit nor demand a refund of one. It cannot arrange for inspections, insurance, or seek certificates of occupancy. It cannot negotiate leases for tenants. And it cannot take title to property without the proper environmental reports showing there is no contamination. If the client has the cash to buy the property outright, they send the funds to the closing on behalf of the accommodator. In return, the accommodator becomes their borrower and executes a promissory note and recordable mortgage in the same amount. However, if the client must secure a loan to accomplish the purchase, they must inform their lender that special considerations need to be made so that the accommodator can execute loan documents but be removed from the liability of repaying the loan. Whatever closing costs are not covered by the bank loan will need to be advanced by the client, and the accommodator will execute a note and second mortgage for the equal amount. At closing, the accommodator signs all title company documents prepared for the buyer, any lender documents, plus the promissory note and mortgage prepared by the qualified intermediary. The client signs all exchange documents required by the qualified intermediary. The title company disperses the funds and document copies like any other transaction. The 180-day time limit of a standard exchange applies also to a reverse exchange. The held property will be transferred to the client on the earlier of the sale of their asset or 180 days following the purchase closing. Until the purchase property is transferred to the 1031 client, the accommodator is the property owner. The title insurance policy will be in its name. The accommodator is the mortgagor, but not the borrower. And the accommodator must be an additional insured party on casualty and liability policies. In contrast, the 1031 client will be the operator and manager of the property after the closing. They will pay the property taxes, insurance premiums, maintenance expenses, and utilities for the property. They will pay the monthly mortgage payment and impounds to the lender. They will make repairs and improvements to the property. They will collect tenant rents and deposits and execute new or modify existing leases. When the asset sale occurs, the reverse exchange is concluded. The promissory note held by the client is paid back with the sale proceeds through the facility of the qualified intermediary. The client then executes a discharge for the mortgage. The accommodator gives a deed for the held property to the client. Where applicable, transfer tax on the deed will be collected either from sale proceeds or the client. In the case of excess cash proceeds, the bank loan will be paid down after the promissory note is satisfied. Strategic Exchange Solutions should be able to execute any reverse client needed 1031s. Please give us a call today.